this episode, I got the great fortune of being with one of my really good friends, Joe. Joe has an incredible story, and stay tuned because we got an incredible story and sharing with you guys how Joe went from engineer of 35 plus years to now a retired real estate investor that owns a rental portfolio, or I'm sorry, not rental portfolio, but a no portfolio. He doesn't like rentals. And I wanted you guys to hear a little bit about his story. What are some of the struggles? What are some of the adversities? What are the things that he had to learn to get from where he was to where he is now? So welcome, Joe. I'm glad to have you here. And I'd like to just kind of start off with, giving a little bit of background, sharing, maybe you can go as far back as maybe just how did you get started in the engineering world and what was that like?
Well, ironically, I got started in engineering when our first child was about to be born. I decided it was time to grow up and get a career. At the time, my major was ancient history, and looking around, I realized there weren't a whole lot of jobs in ancient history. I had a minor in German. I took a number of foreign languages. The only opportunities available to me really would have been to get a master's or a PhD and then teach either high school or at a junior college somewhere. Not a rosy prospect for the rest of my life, even though I loved it.
Right.
I still consider that my education. But when we realized we're going to have this child, financial security really became a big driver for me. I literally looked through the college catalog at all the different majors that were available, and I looked at which ones would pay the best and which ones would let me out the door the fastest.
Yeah.
Very simple decisions.
Well, I mean, also too, I think something that's important is, I think something that you're really humble on, and some people may not know is I think you're brilliant. I think, obviously, I know you worked really hard at it, but I think you probably had a gift growing up as probably just being very smart in certain fields. I mean, what was that like growing up?
I had great friends, all of whom went on to college, and I went to college because they did. I roomed with 7 of them. There were 8 of us, all of whom still keep in contact 40 years later. I've traveled with a couple of them and in recent years, and they had a great influence on me. I mentioned that I was a history major. The classes I took along with that were all scientific classes: biology, a lot of math, chemistry, physics, things like that.
Right.
And so when it came time to choose my profession as opposed to my passion, the 2 choices that really came to mind were becoming an electrical engineer or computer science, which is a brand new field at the time. Computer science won by about a year. In other words, given the credits that I had, I would get out of school a year earlier than electrical engineering. So that's what I chose. It wasn't a passion. It was all about stability for the family that was growing at the time. And I really have no regrets because that career was really good to me over 3.5 decades. I might add, I mentioned that computer science was a new field at the time. The university I attended had a new program that was very popular. There were 1,600 applicants to get into that department that year. They were only going to accept 60 out of that 1,600. So I worked hard and I ranked about 30 out of that 60 and got in.
Wow.
And that was a very good thing. Still have a few friends from that part of my life as well. So jumping forward 35 years from that point in time, actually 30 years, about 10 years ago, I was working with a fellow named Mark. He was my boss's boss's boss at a company named L3 in Greenville, Texas. And I had observed Mark. He at the time had about 20 rental properties. He was always hustling, always looking at a new property. He actually bought a couple of them that he hadn't even looked at. He knew the neighborhood really well. He had bought other homes in the neighborhood, and that was close enough for him.
Right.
So he jumped on them, and he was very successful at that. He didn't have to work anymore, but he did run a tight ship. By that, what I mean is he had a solid process in place for vetting new properties, getting any work done that needed to be done. He had a great team of contractors that he trusted, and they always gave him good advice. And he always had a backup in place for when those contractors raised their prices on him. So that was important.
So that was kind of your introduction and maybe what got your curiosity in maybe real estate investing, right? Was kind of his story a little bit.
Yes, that's exactly right. I ended up going to a couple of conferences with him that were held in Dallas. And one of them, one of the vendors was a company named Quest. Quest is a custodian for self-directed IRAs. And at the time, I had a fair amount of money from my engineering career in various 401ks from the half a dozen companies I worked with over the decades. And there was a little bit of a spark there that made me want to move some of those monies into the self-directed world and leverage those monies in some sort of real estate-based career.
Right.
Also, about that time, one of the speakers at the conference was a fellow named Eddie Speed. And when I heard him speak, I thought, this guy's either a little bit crazy or he's an absolute genius. And 10 years ago, I think it's a little bit of both. A lot more genius than crazy. But nonetheless, that was my first impression of him.
Yeah.
He was in the note business. And by that, what I mean is he buys and sells and owns mortgage notes. In other words, when you have a mortgage note, you are the bank. So instead of paying all that principal and interest to a banking entity, you pay it to whoever owns the note.
Right.
And there's a whole science behind that we could talk for days about. Eddie runs an organization named Note School, and I joined Note School with Homero at the same time. That was about 6 years ago, and that's been a wealth of knowledge. And if I can point to one aspect of Note School that was really invaluable to many of us who were in Note School at the time, it was back during the COVID years.
Right.
This is an odd description for Eddie. But he was, I don't know, a ray. A ray.
It's okay, Joe.
He was a ray of shining hope.
Yeah, I mean, so we, we can talk about that here, Joe, of, you know, I don't know, the whole story or the situation, but he, obviously inspired and helped guide, and like you said, was a ray of hope in maybe a time that had been challenging, right? I mean, I know a lot of people sometimes see, all the good things that somebody accomplishes, but they don't see all the difficulties, all the headaches, all the adversities, all the trials, all the, losses, per se, and possibly mistakes. So we could talk about that briefly, kind of leading up to that point. What are some of the things that you had maybe done, or what were you going through around that time?
Well, at that point in time, I had leveraged a lot of those Quest funds that I'd moved over diligently, and I was investing in, or I was really a hard money lender at the time. And Homero and I did a number of deals together where he was the hustle out finding the deals, and I was his bank to fund those deals. And that was a good partnership where over time we built a lot of trust together. Also, during that time frame, um, we had a property in Plano, Texas, in which we had lived for 25 years. And I wanted to leverage some of the things that we had learned in note school to sell that property with my own financing in place and earn the interest on that sale
Right.
over the next 30 years. And that was the goal. It ended up being a little bit harder than I thought it would be. That was really at the start of COVID when we were doing that activity. And
There was a lot of uncertainty around that time, right?
there was. That ended up not being a good deal for owner financing at the time because the average rent that one could charge in that neighborhood was at this point, and the sales price with principal and interest would have been way up here. And the rule at the time was you didn't want the principal and interest payments to be more than about 1.2 times what the average rental amount would be.
And I think also, at that time, it was, there was a kind of a good both options of like, hey, if we can provide and turn this into a note, we'll be happy. But then also, if we're able to just cash out and get the cash, we can also leverage that cash to acquire more properties or more opportunities. And we ended up selling it retail, and you were able to get that cash and grow those funds.
So the cash ultimately morphed into 3 additional deals. That is to say, through Homero and another wholesaler, I bought a property in Tom Bean, Texas. It really exists. And it was a nice property that we bought subject to the mortgage that was in place at the time.
Right.
And jump to the end of that story, we sold it for about a $45,000 profit. So we had the monies from the house in Plano plus another 45,000, which I then leveraged to purchase a house in downtown Dallas, in a community called Costa Linda in Dallas.
Yeah.
It was a home that I bought through Homevestors. Got it for a reasonably good price. I wish I'd have had Homero negotiating for me, though, or I'd have gotten it at a great price. But it was an expensive home in terms of all the repairs that were needed. And I really cut my teeth on that home as far as learning what it takes to corral a series of contractors to get to the finished product that could be sold. Many of those contractors came through Homero's network, and to make a long story short there, we had to redo some of the foundation. We replaced all the plumbing because it was old cast iron pipes, and many plumbers would not even touch cast iron because it's so brittle. And as soon as you try to join a new pipe with a cast iron pipe, the cast iron just shatters. And so we just replaced it all. The electrical was an old glass fuse panel that was in a closet.
Right.
Probably, well, definitely not to code. And so, again, through one of Homero's contracting contacts, we replaced all the electrical in the home. I had a great general contractor helping me on the deal. That was during the first Snowmageddon that we had
Yeah.
3 years ago. And to tell you how good this fellow was, I, like most people in the area, had no idea what was about to hit as far as the severity
Of the storm.
of cold and how long it was going to last and how deep that cold would be. A few days into the storm, I started to realize, oh man, we've got that house in Dallas. We're probably going to have some damage from broken pipes. And so I called the general contractor and I said, hey, as soon as your boys can get on the road, would you please have them go over to that house and shut off the water, the main, so that we can, in a controlled fashion, turn everything on and observe what is broken. His reply to me was, you don't have to worry. There's no damage. We shut it off before the storm on your behalf.
Yeah.
Totally covered my headquarters.
Yeah, and for some of those that are watching, there was a really bad storm a few years ago here in really Texas, but here out in North Texas, it was below freezing for an extended period of time that is not normal, and there was a lot of damage. So many homes had busted pipes, especially the older homes, and it's unfortunate for some of the people that didn't know how bad it was, and they had 30, 40, 50, $100,000 in damages. So real quickly, Joe, I do want to help people understand that a lot of people watch HGTV or they watch some of these shows, and they make it seem like fixing and flipping and renovating properties is fairly easy. I mean, what would you say, based on your experiences as having to deal with contractors and having to fix and flip properties? What would you say your experience has been like?
My experience, for the most part, has been very good because of the network of contractors that Homero has built around himself.
Yeah.
These people work very hard. They're honest and loyal, and I do my best to treat them well. Often, if they'll say it's going to cost $10,000, I'll pay them $10,500 because I just want them and their families to be financially as healthy as I can make them. I want them to have work and opportunities, plus a little bit of extra.
Yeah.
They're also a source of potential buyers when it comes time to sell with owner financing.
Yeah, because the majority of these, contractors are all small business owners, and as you guys know, being a small business owner is pretty difficult and challenging, especially right now that there's a tightening in finances and in the market. it's getting a lot more strict, and there's a lot more requirements for people to get a loan on a mortgage. And we've actually, kind of by accident, been selling some of our properties to some of our own contractors because they're able to see some of these properties as soon as, for those of you guys that follow us, you guys see some of the social media and Facebook posts on properties that we acquire. We put videos, hey, this is the project, this is what we're going to do. And a lot of times before we've even touched it or before we even started any type of renovation, we get people that raise their hand and say, hey, I'm very interested in that property. Can you walk me through what that looks like? What kind of a down payment is required? And every single time that we've had closing with some of these contractors, they're always in tears. And I think we have a couple of videos that you guys can watch below on, them just being grateful for having the opportunity that somebody gave them a chance to, live out that American dream, which is, become a homeowner, right? When nobody else gave them a shot.
Yeah, banks don't like them because their income is very erratic.
Yeah.
Whereas when I'm financing a loan to one of them, I look at, first off, do I believe they can afford it? And second, I look at their average income over time. And I go into it with eyes wide open, knowing there may be a month or two where they don't have income and can't pay the mortgage. But it's going to be followed or prefaced by those really good months where they may pay 3 or 4 months worth of mortgage payments. And so I really do look at the average, and I know with great confidence that there's such intense pride of ownership with these people that we're never going to have to take the property back.
Oh, yeah.
They're going to do anything they can to keep that home in the family once it's in the family.
Yeah. And because they're contractors and they're prideful, it's just that pride of home ownership. Most of them, as soon as they purchase the property, they're starting to put their touches on the property, doing landscaping, doing flower beds, doing patios, doing so many things because, now it's something that they can call home. And we know for a fact that, like you said, unless something drastic were to happen to them, we're not going to have any sort of issue. We're in a good equity position. They pay on time, like clockwork. So we're really happy to work with them, and it just creates a win-win situation where obviously we're able to get above average return versus having capital or having money in the bank, and it's secured by real estate. If something were to happen, if we did have to take the property back, we're in a good equity position. And just very unlikely, right? Because most of the time, these people are putting 10, 15, 20% down versus sometimes on the traditional side, people with an FHA, or sometimes they're putting just closing costs. It's a little bit easier to walk away from that versus somebody that's put, $30, $40, $50,000 as a down payment on a property.
Yeah, so I have two other things to say about that community. One is they're building our homes. It's only just and fair, and I'm not a bleeding heart liberal by any means, but it's just fair and right that they have the opportunity for owning their own homes.
Right.
They work hard, they deserve it. Getting back to your HGTV question from a few minutes ago, not all contractors are created equally. We have had one plumber that comes to mind who would commit, yeah, I'll be there tomorrow. You meet him there the next day, and he doesn't show up.
Yeah.
And I ended up firing that one because nice enough guy, but just could never get his own life organized sufficiently to follow through with his commitments.
Yeah, and I mean, let's briefly talk about that. I mean, these are, things that you're going to be learning if you're just getting started in the fix and flip world or dealing with contractors. I don't know the whole story, but from my experience and from what other fellow more experienced investors had always told me is on most contractors, unless it's obviously something small, but for the most part, never pay the contractor up front 100% because it's something in their mind that not all of them, but a lot of them, once they get the funds, it's like they feel like they don't really have to finish the job, or they're not, it's not on their priority. Versus if they haven't got paid, they want to finish that job because they want to get paid. So I don't know, but in that scenario, was that something where maybe the majority of all the funds were allocated, or was it just he just you know wasn't paid and just wasn't responsible?
He was just a very unorganized individual,
Yeah.
and there's no correcting that.
Yeah, and that happens, and that's just obviously things that you have to deal with when you are out on the field dealing with contractors and situations, right? There's good, there's bad, and there's ugly, and you just with experience. I mean, obviously, one thing that I do want to touch on that I think you've highlighted and mentioned a few times is the relationships will take you 3, 4, 5 years further ahead versus you having to learn, right? Like if you have no experience, you have no resources, nobody to have conversations or to get referrals from, you're going to have to kind of, take your uh, luck of the draw on dealing with some of these contractors. And if you don't know, you're also maybe paying substantially more than you should, and or just dealing with a lot of these headaches. So there's a lot of value in having relationships. Just like you, Joe, when I first got started, I also had referrals from other friends as well. As who have you used as an electrician? Who have you used as a plumber? So if you're just getting started, it's probably a good idea to reach out to other fellow investors in your community to get some of those referrals. Real quickly, Joe, I do want to take a step back and kind of maybe touch on some of the things that maybe that were challenging or difficult for you when you were first getting started, going from an engineering world perspective to now getting involved in real estate. So let's talk about in the engineering world, you go to some of these conferences and training events on real estate investing. What were some of the maybe challenges for you or things that you struggled with initially from you were getting some information, these are the things that you can do, and you had the resources to maybe go out there and start doing them. How quickly, did you maybe start taking action on some of those things, or what were some of the initial struggles maybe that you saw for yourself when you were first getting started?
Well, I've mentioned Quest Trust Company. They held a conference, their very first conference. I think it was 2018, and I attended it. At the time, I had a fair amount of money in my Quest Roth account, undeployed. It was just sitting as cash. And that conference brought together probably 30 speakers that talked about different aspects of investing. Many of them related to real estate. Eddie Speed was one of the speakers. He talked about note investing and note school. But that conference lit a fire under me. A couple of days later, I did something very wise and very foolish. It's hard to do both of those at the same time, but I pulled it off. There was a well-regarded gentleman named Walter Wooford who had an online forum where you could post and chat back and forth with other members of the group. And I was really fired up after this conference. I posted on there, hey, I've got X number of dollars in my Quest account, and I'm looking for a place to invest it. I was wise in that I'm reaching out to trusted individuals, or are they?
Yeah.
And I was foolish because, or are they? Within a day, I received responses from 2 individuals, one of whom I had met at the conference, and I knew and liked him and trusted him. He had an opportunity in Indiana and it was for a $160,000 hard money loan. I did that loan. I was scared to death. Every nerve of my body was on fire when I signed that paperwork, scared to death. Oh my gosh, what if I lose all this money?
Right.
Well, jump forward about a year. My wife and I are in Grand Teton National Park on vacation. I'm still an engineer at the time. I get a text notification or an email notification from Quest. My $1,400 payment had just hit. That was about the 10th payment on a regular monthly basis that I got from that hard money loan. And I showed my wife and said, look, we just made $1,400 without doing anything other than signing the paperwork 10 months ago.
Right.
And she was impressed. That loan paid off perfectly. Didn't have any trouble with it whatsoever. I attribute that to the knowledge and trust that I had with the individual who put us in contact with each other.
Right.
The other person who reached out to me was a fellow named Forrest in Virginia. Well-regarded investor in Southern Virginia in the Richmond area. I checked out some things that he had written and things that had been said about him, and I did a hard money loan to him as well. Not quite as nervous a week later when I did that loan to him. Again, he paid like clockwork, and it was a very good experience. About $100,000 loan at 10%. It went for about a year, so I made $10,000 on my $100,000 and got all the principal back. Very good experience.
Awesome. Yeah, no, I mean, you know, at the end of the day, I think you went out there and you took action. You went out to these conferences, you're learning, you're doing your due diligence, right? And I think a lot of people, one thing that I want to highlight, a lot of people sometimes, you know, especially around New Year's, right? They're like, my New Year's resolution is I want to get in, you know, started. I want to become a real estate investor in some capacity, right? And they get excited, and there's several events around their area. A lot of them are free. Some of them are a few $100s, but they never go out there and they take action. And they're like, you know, I'm not going to go. But one thing that I want to highlight, something that you said, is you went to a conference that Quest held in 2018, and that conference lit a fire under you, and those events are life changing. And something that one of my mentors, Jim Rohn, says is events are life changing. Which one is going to be life changing? We don't know. That's why it's important to go to as many good conferences and events as you possibly can. And I have similar experience, Joe. I mean, I've gone to a lot of events. Sometimes some of these free events are, you know, are life changing, and sometimes they're reiterating, or you're hearing something that you need to hear, or you're meeting somebody that you need to meet. I mean, for us, fortunate enough, you know, the same thing. I met Eddie Speed in Note School, and I joined in 2019, and this is how our relationship started. We met through that mastermind in that community, and here we are creating a relationship, a business together. We've done so many deals together, and you know, it's rewarding. I feel so fortunate to be able to do business with somebody that I like and trust. I mean, you're an incredible person. I think you've helped so many people, and for those of you guys that may not know you, I think, you know, I say this to my wife and to my friends, you're one of the kindest. You're somebody that I know that has one of the biggest hearts that I've ever met in my entire life. You're an incredible person, and I'm just fortunate to call you a friend. And you know, I'm really excited to be doing business with you, and you know, to now help you build out a legacy. You know, now fast forward to where you're at now, you've been able to take some of the teachings through Note School and some of the other communities, and starting to build a rental portfolio, right? So what did that look like? Did you start just adding a couple here and there?
Not rental.
Oh, sorry,
a note
no
portfolio.
portfolio, right?
And well, the first note that I bought didn't turn out very well. It was a $34,000. What's the term?
Performing, non-performing?
It was a performing note. It had $34,000 yet to pay.
Unpaid principal.
Unpaid balance. UPB.
UPB.
I couldn't think of that acronym for the life of me. I paid $19,000 for the note. Ended up losing $9,000 on the deal.
Yeah.
It was sad because I had a partial investor all lined up to buy that partial on that note, and the whole thing just fell apart on day one. Never collected a penny from them, even though they had paid for 5 years straight.
Yeah.
So a lesson learned there was, in my personal opinion, you're best off if you can create your own note where you know all the variables up front. The borrower is not going to be perfect. It's a matter of, as they teach in note school, picking and choosing the things that are most important to you and realizing which of those imperfections you can live with. And that's been very good for me. And Homero's been a lot of help. One of the vendors that we use is WG Title, and they've been super at helping us construct those notes in legal and following all the statutes and laws to make them good, viable notes that are going to pay for a long time. They help with the underwriting. Although I'm the final underwriter in any note that I create, it's my money I'm putting on the line. I'm the underwriter. One by one, we do these, and let me give you my definition of retirement. If you have expenses that are here that your household has to live on, and your passive income is here, then you can retire.
Yeah.
If that passive income is solid and predictable, and you know it's going to be there, you know how long it's going to be there. With notes, they pay off eventually.
Right.
So you've got to account for that. That's very engineering-like as far as doing that analysis.
Yeah, basically going from you working for money, now money's working for you, right? Whether you really do very much, somebody's paying that mortgage, you're going to get paid on, the 15th of the month from those notes that you're collecting, right?
Right. You still have to keep on top of them.
Right. You got to manage them, make sure taxes are paid, make sure they got insurance, and obviously make sure that they all get paid, because once you start accumulating so many, you want to make sure you track all of them, right?
Yeah. Any note that we originate uses a third-party servicer,
right,
who is well-versed in all the ins and outs to make sure everything is legal and above board. There's a small fee, about $30 a month, that you pay to that servicer. It's usually the borrower that pays that.
Yeah, most of the times it's kind of the requirement that we put, right? Borrower's going to pay for the note servicing fee. I think, yeah, it's $35 with the company that we use. And yeah, I mean, that's kind of the things that we have learned over the years, and we're sharing a lot of that with our community now, Joe. For those of you guys that may not know, we actually host a monthly meetup, note investing meetup here in North Texas. I think we are eventually going to start doing some virtual events as well. They're usually all free events, and we are going to make sure that you do all the right things to make sure you structure your note properly, making sure that you do your due diligence and you do all the right things to make sure that your note is valuable. Because real briefly, we'll touch on it, real quickly, Joe, is what are some of the things that people may not even know that you can do with a note? If you own a note, somebody's paying you, what are some of the things that can happen or that somebody has access to other than getting a steady stream of income?
Well, I'm not an expert at it because I am buying note or creating notes for that income stream.
Right,
That's my retirement.
right.
But if a note holder, a note owner wants to, they can always sell the note.
Okay.
There's usually a discount involved when you sell the note. We talk about different things in our
Class.
monthly meetup that would cause a note to be discounted. You could sell a partial to that note. What that means is if you look at the lifetime of a note, it is a consistent, steady stream of monthly payments. A partial would be selling the first N of those payments for X amount of dollars.
Right.
And you can do that to other investors, and that's often a very good way of recouping some of your capital to reinvest it. What happens at the end of that point in time is the note ownership reverts back to you and you collect all the tail end of the note. There's something called hypothecation, which lets you loan against that income stream. A bank will literally lend you 50, 40, 60%
Yeah.
of that note's value against that income stream. In other words, they will receive the payments now in exchange for purchasing the rights to that income stream. But again, my favorite is just to keep the note.
For cash flow.
They're good notes. We create them.
Yeah.
We know the people, and they've been a very good source of income for us. To quote a fellow named Tom Henderson, I love America.
Yeah. There's just so much opportunity, and you just need to know some of the things that you can really do and really build something that you want to, build, right? And the fun thing is that we're able to build business with people that we like and, set our own schedules and do things. You see some of our videos, we're going to properties together, we're having lunch together, and it's been really exciting. So what would you say, kind of to wrap things up, Joe, what would you say to somebody that may be in a position similar to yours, right? Maybe they work in a W-2, maybe they're thinking about retirement, maybe they have a 401k. And for a lot of people watching this, it's been unfortunate for so many people over the last couple of years. There's been unfortunate situations where the market has shifted, the market has changed, and there's people that have their money in the market, the stock market, and they've lost hundreds of thousands of dollars over the last couple of years. And that's the good thing about note investing is, for the most part, you're going to get a consistent stream of income, and we're going to teach you how to do things properly so you mitigate risk, right? So what would you say to somebody that's working a W-2, whatever W-2 it is? It can be engineer just like you, or it can be anybody that is thinking about taking that step. What would you say some of the things that they can start doing to kind of go from where they're at to maybe where they want to be, or somebody that wants to think about retirement?
Well, the first thing I would do, if I had it to do over again, I would do some things exactly the same. I would create an account with a self-directed IRA company, get monies moved into that account, preferably as Roth.
Right.
And I would be very diligent, the younger you are, at Rothizing that money as you can afford to do it every year. Build up a war chest of investable, self-directed Roth money. And then I would identify individuals that you can trust. And I would dip my toe in the water with something smaller, short-term, working with an individual and see how it goes.
Yeah.
I think back to the dozen or so things that Homero and I have done together. The very first one was a transactional loan. He had a double closing set up he needed $162,000 to close the first one. And then the second one had their own mortgage lined up, but he needed that money for about 5 minutes to get across the finish line.
Yeah.
You remember that?
Yeah.
And he said, hey, would you, for a few $1,000s, loan me money for 5 minutes?
Yeah.
And we did that.
Yeah.
Now, it wasn't that smooth. I had to research what a transactional loan was. I got some advice from my friend Forrest, from my friend Mark, about how to structure the paperwork for that transactional loan. The advice I got from them was, what if it falls through and that 5-minute loan ends up being a 6-month loan? Structure your paperwork that way.
Right.
But at the end of the day, in one afternoon, I made about $3,000. Homero probably made 10 times that on his deal, but it was a partnership.
Right.
And yeah, $162,000 was a lot of money to risk on an unproven entity such as Homero. But it was papered up such that, worst case, it all falls through and I have to take the property.
You're in a big equity position.
That's right.
Yeah.
So, in terms of an engineer looking at it, you've got a risk matrix where in one corner of the matrix is things that are not likely to occur but have a big impact. And then the other corner of the matrix would be things that are really likely to occur but not much impact. And then you look at that matrix and you put things into place to mitigate risk wherever necessary. And that, as an engineer, is a way of tackling really hard problems. Real estate is not a hard problem.
Right.
When it comes down to it, does it have a good foundation, good electrical, good plumbing, good roof, good neighborhood? There are only so many variables to this. It's not hard,
Right.
especially when you surround yourself with people that you trust who really know what they're doing.
Makes things a lot easier.
It does.
Awesome. So we'll go ahead and wrap this up. It's been an honor, privilege to do this, Joe.